Hello everyone. Yesterday, S&P Global Ratings released the India's PMI data, which includes a lot of input data related to Indian companies and what we can expect in the upcoming January quarter earnings. So in this video, let's look at those details first, along with our regular pre-market report for today, 17th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty, and to some extent Sensex. First of all, if anyone wants to read the report, please have a go. I will attach the link in the pinned comment section. As a top line for December month, all improved compared to November month. Composite, service and manufacturing output PMI all increased to above 60 compared to around 58 a month ago. This above 60 number is the third time this year. Likewise, 3 times above 60 was last seen all the way back in 2008. This suggests strong private sector expansion, which is a good news. Now, in line with the top line, here is a quick summary what's present additional on the report. First, India's employment reached new heights. Indian companies increasing both temporary and permanent staff. Then second, both domestic and export demand increased at the fastest pace in the last 5 months. Finally, raw material input cost reduced compared to the last 5 months but are still above the long-term average, which is a bit of a negative. However, this report also suggests that Indian companies are becoming more efficient, which is expected to offset the input cost pressure. Hence, overall, the PMI report indicates that unlike the September quarter where Indian companies didn't deliver good earnings result, the December quarter is expected to be much better. Particularly, export-driven sectors like IT, pharma and auto parts and to some extent infrastructure companies are expected to perform well. This is one reason why pharma and auto sectors turned positive yesterday despite overall selling pressure in the Indian market. You might ask me then why IT was negative. Part of the reason is yesterday Citigroup downgraded TCS stock with a sell rating, which in turn dragged down the whole IT sector. Then in addition to the S&P Global PMI, at the same time our Ministry of Statistics released the wholesale inflation data for November month. The number came as 1.89%, which is lower compared to October month and below the analyst expectation. Here, more positive news is that food inflation it dropped to around 8.5% from 13.5%. If you look at the subset of food inflation, vegetable inflation is a major contributor, increasing by 29%. I know which appears scary. However, in last October month, it was 63% increase. So, from 63%, it dropped to 29%. If you look in this way, it appears much better. Hence, market now has increased confidence that Indian inflation is easing. This is why banking stocks were not that negative yesterday. HDFC Bank and ICICI Bank were negative due to their influence of its weightage in Nifty and Sensex. So, fundamentally, whatever the macro data released yesterday related to Indian companies and the economy was good. However, in the derivative market, both FIIs and proprietary traders took a negative stance, which in turn created a tug-of-war between buyers and sellers. If required, please pause and have a look. Yesterday in the index future market, FIIs reduced their long position by 8% and proprietary traders reduced theirs by 11.5%. To add fuel to the fire, both increased their short position. Then in the index option market at the end of last Friday, 2.6% more proprietary traders open interest wanted the market to go up. That reduced to neutral yesterday. Currently, based on open interest, only retail traders make money if the market goes up. Other than that, both FIIs and proprietary traders wants the market to remain neutral, with FIIs having a slightly negative bias. So those were the quick takeaway from yesterday's Indian market. Then coming to US market, their PMI data was mixed. The service sector increased significantly, but the manufacturing sector contracted. As a result, the Dow Jones closed negative. On the other hand, some investment firm increased Tesla's share price target and rating, citing the Trump presidency as a reason, which in turn increased the Tesla share price crazy. In the end, Dow Jones was down marginally by 0.25%, but S&P 500 was up by 0.38% and Nasdaq scaled a new all-time high, increasing by over 1%. In case of VIX, it increased by 6% and moved above 14.5 from below 14. Regarding Indian ADR, they closed mixed. As it is, both IT stocks were positive, but both banking stocks were negative. If we calculate the arbitrage, both banks indicating a negative 0.5 to 1%. On the other hand, IT stocks and Reliance GDR were very much neutral. About GIFT Nifty, early morning today, it closed at 21,705. Finally, yesterday's premium dropped to some extent, just 50 points, hence equating that to the spot, indicating a flat opening with a negative bias. So, as a summary, global momentum and the US market are looking good. However, GIFT Nifty, Indian ADR and even Reliance GDR all indicating a flat opening with a negative bias. In addition, FII and proprietary traders open interest positions in both NSE and BSE all indicating neutral to negative bias. Just for info, in the cash market yesterday, both institutions, FIIs and DIIs both turned as net sellers. FIIs net sold only for 280 crore rupees, whereas DIIs net sold for 230 crore rupees. About the things to look out, at 12:30 p.m., UK's unemployment rate and Germany's business climate index are due. Then in the aftermarket hours, around 3:30 p.m., whole Europe's business climate data is scheduled to release. And finally, for the US market in the night, their November month retail sales data is due, which analysts expect to increase by 0.6% month over month. Then in addition, industrial production growth rate and 20-year bond auction are some of the items we need to keep an eye out today. Coming to technical, Nifty opened lower and it was again back range bound after Sensex expiry day volatility as it trades between 24,500 and 24,800 and then closed below 24,700. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with upper and lower shadow indicating trade volatility. However, it still traded above all key moving averages and within the upper band of the Bollinger Band. Additionally, it took support at the downward sloping resistance trend line. Hence, the sentiment is still positive for the short term as long as Nifty sustains above 24,500 and the critical moving average. So, on the higher end, Nifty may continue its upward movement towards 25,000 in the short term. On the lower end, crucial support is at 24,500. Then in case of Bank Nifty, it opened 80 points gap down and after some volatility closed the session above 53,500. Thus on the daily chart, unlike Nifty, Bank Nifty formed a small green candle with upper and lower shadow, which is a neutral candle, but it also remained above all key moving averages with a higher high, higher low formation. In addition, on the weekly chart, it traded near the upper end of the Bollinger Band, which all indicates a positive outlook. Hence, Bank Nifty needs to hold above 53,300 zone for a bounce towards 54,000 and then 54,250 level with support at 53,300 and then at 53,000 zone. Regarding the options front, the maximum call option open was at 25,000 strike followed by 25,500 and 25,400 with maximum new call option writing at 24,700 strike and then 24,500 and 25,200. On the put side, the maximum open was at 24,000 strike followed by 24,500 and 23,900 with maximum new put option writing at 24,000 strike and then 24,200 and 23,900. Thus, from options data, Nifty is likely to remain in the 24,000 to 25,000 zone with immediate resistance at 24,700 and support at 24,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.